Hello traders, welcome back to the Forex Geek where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the TradingView most powerful drawing tools that can transform your technical analysis and trading strategies. These technical tools help you to identify key trends, mark support and resistance level, forecast potential price movement with great accuracy. Whether you're a beginner or an experienced trader, mastering these tools will significantly enhance your chart analysis skills and potentially improve your trading results. So you have to stay until the end of this video as we cover each tool in details, showing you exactly how to implement them in your daily trading routine for maximum effectiveness. The first tool would start with our trend lines. Now, trend lines are powerful instruments usually for identifying market trends. When you use a trend line tool, you are essentially drawing a straight line by connecting two or more price points on the chart. This helps to visualize the overall direction of the movement of price. This is exactly how we use our trend line, drawing two or more points on the chart where price meets. Exactly how we use the trend line. As we draw this line, you will begin to see the market trajectory becoming more clear. Remember that the steepness of your trend line can provide valuable insights into your strength of your trend. One of the key benefits of using a trend line is the ability to act as dynamic support and resistance levels in an uptrend. In an uptrend, the trend line often serves as a support level which prices may bounce off. In an uptrend, it may bounce off these levels. Conversely, in a downtrend, this acts as resistance levels where can potentially cause price to reverse lower. This information can be crucial for timing your entries and exits. It is important to note that trend lines aren't set in stones. As the market evolves, you may need to adjust your trend line to fit the new price. This flexibility allows you to stay in tune with the market's changing dynamics. Additionally, when drawing trend lines, focus on connecting major swing points. You must connect major swing points. Minor swing points are not really necessary. This approach will give you a clearer picture on your overall trend. Remember, trend line tools is more than just a line on your chart. It's a visual representation of the market psychology that can help you anticipate potential price movements. Remember that when you master this tool, you'll be able to better equip yourself for identifying trend reversals, breakouts, and continuations of pattern, ultimately enhancing your trading decisions on the chart. Now, the second tool we are going to talk about is called the channels. The trend channels is the next tool we are going to talk about, and this tool is basically an excellent tool for identifying and visualizing price movement in a channel. This is basically what this is all about. Visualizing price move in a channel. The channel indicator consists of two parallel lines. The upper line, which is called the resistance, and the lower line, which is called the support. This is basically the channel line indicator we are talking about. So by drawing this, you can see that we can form a channel on this chart. So this is our channel indicator. The channels helps us to understand the overall direction of the market, whether it is in an uptrend, a sideways market, or a downtrend. If we are to draw a channel towards the downside, we would see the same thing. So let's try drawing a channel towards this side. As you can see, this is a channel to the downside of the market. Channel basically tells us what phase the market is in. Either it is in an uptrend, a downtrend, or if it is in a sideways moving market. By using this tool, you can pinpoint areas where price is likely to reverse or continue its movement. To draw a trend channel in the trading view, you start by picking a parallel channel tool, which was what we picked. We picked a parallel channel tool. This would help us to draw these channels. All you need to do is connect at least two major highs while connecting the lower lines. If you connect the two major highs, automatically the two lower lines will be connected in at least two major lows. These areas between the lines form the channel. So let's see how we can draw the channel again so that you guys will understand. You just connect two major lows or two major highs. When you connect that, it will be able to show you your channel. As you can see, you can extend it however you want it to be, but it has to suit whatever area you are trying to project. One of the key advantage of this trend channel is their ability to highlight potential trading opportunities. For instance, in an uptrend or in an uptrend channel, you might be looking for buying opportunities at the lower boundary. So our buying opportunity will come at this lower end at the channel low. These are where you'll be looking for buying opportunities. Similarly, in a downtrend, you'll be looking for selling opportunities at the support, at the resistance area, the upper end of the downtrend. You'll be looking for selling opportunities near this resistance area. It is also important to pay attention to the slope of the channel. A steep slope often indicates strong momentum, while a shallow slope suggests a weak trend. Additionally, watch out for breakouts beyond this channel pattern. Like you can see a breakout to the downside in this area. You have to watch out for breakout because they can signal a shift in market direction. So by mastering the trend channels, you can gain deeper insight in the market behavior and improve your ability to forecast price movement. This tool is not just to help you identify support and resistance on your chart, but it makes it an invaluable addition to your trading arsenal because it can keep you aligned with prevailing trends in the market. Now, the next tool we are going to talk about is the support and resistance tool. The support and resistance tool are fundamental to any trading arsenal, providing crucial insights into the potential price reversal points and market dynamics. These two help you identify levels where buyers and sellers pressure buying and selling pressure are likely to intensify, offering valuable entries and exit signals for your trade. In TradingView, you would find several tools to mark out both your support and your resistance. You can use tools like the horizontal ray. You can use tools like the horizontal ray. They can help you mark out both your support and your resistance. It can help you mark out support and resistance on your chart. We can also use tools like our rectangles or our ray. You can use tools like our rectangles. It can help us also spot out our areas where we expect price to act as a resistance point or a support area. As you can see, these are the tools that we can basically use to mark out our resistance area and our support area in the market. As you become more prolific with these tools, you will notice that previous resistance level becomes support level when broken, and previous support levels become resistance level when broken. This concept is known for the role reversal. It is powerful and it is a powerful aspect of technical analysis that help you to anticipate future price movements. And as we can see in this area, when price broke through this resistance, it came back and acted as a support on this particular trend, on this particular support resistance that turns support from what we drew. So this is the basic concept of using our tools as both support and resistance levels on our chart. As you apply these tools to your chart, you have to pay attention to the number of times price have respected a particular level. Generally, the more times a level has been tested, the more significant it becomes. Like this area, when price retest this area more times, you know that buyers are finding it difficult to break this level, meaning sellers are coming in. And as we can see this area too in price, when we notice that this support area price was finding it difficult to break through this area initially, we can say that this area is a very significant support region in the market. So by mastering the support and resistance tools in TradingView, you can enhance your ability to identify key levels, improving your trade timing and your risk management. These tools can be used in conjunction with other technical analysis tools and can significantly boost your technical strategy efficiency. Remember, these tools can also be used as areas for stop losses and take profits on your chart. So we can bear this in mind. Now the next tool we'll be looking at is known as our Fibonacci retracement tool. Our Fibonacci retracement tool is a powerful tool that can help us identify potential reversals in the market, reversal points in the market. This tool is based on the Fibonacci sequence, a sequence of numbers which each number is a sum of the two preceding numbers in time. This is basically what the numbers is all about. The numbers on the chart is all about. To use your Fibonacci retracement tool on your Forex chart, all you need to do is to identify a significant price move. When you identify a significant price move, either to the upside or to the downside, once you found this move, you draw your tool from the start of the move to the end of the move. And as you can see, drawing our Fibonacci from the start of this move to the end of this move plots all these levels we are talking about. The trading view would automatically calculate and display the Fibonacci key levels, which are the 23.6 level, the 38.2 level, the 50% level, the 61.80 level, the 78.60 level. It will plot all these levels on your chart. These levels are crucial because they act as areas where price might pause or reverse from. For instance, in an uptrend, you might be looking to buy at some of these levels when price retrace to this area. Levels such as the 61.8 level, the 78.60 level, or your 50% level. These are the areas you're expecting price to act as a support, potentially leading to the continuation of your uptrend. It is important to note that while 50% level isn't technically a Fibonacci ratio, it is included because it is a significant psychology level for many traders. Often you will see price react strongly from the 50% level. This level acts as resistance in a selling opportunity and acts as support in a buying opportunity market. When Fibonacci retracement can While Fibonacci retracements can be powerful, they shouldn't be used on isolation. You have to combine them with technical indicators or price action for more reliable signals. For example, if you are looking for a candlestick pattern to form at these levels in conjunction with a trend line or a moving average, it makes taking these levels more realistic and with more confidence and more confluence by combining it with these tools. By mastering the Fibonacci retracement tools, you'll be able to add a valuable dimension to your technical analysis toolkit. It can help you to identify potential entries and exit points, set more precise stop loss levels, and even forecast possible price targets. Remember, practice makes perfect, so spend time and apply dis tool to different charts and time frame to truly understand its power on your demo account before applying dis to your real life market. Now, the tools that the other tool we are going to talk about that can help us is our forecast tool. In TradingView, it is an invaluable resource for planning and managing your trade with precision. Dis tool allow you to visualize, project po ten tial price movement, helping you to set realistic goals on your chart. One of the most commonly used forecast tools is the long and short tool. Dis allows you to stimulate a trade by marking your entry point on the chart. Marking your entry point, you set your stop loss level and set your take profit level. It is not only helpful in visualizing po ten tial entry points, but it helps to calculate your risk to reward ratio based on dis setup, whatever setup you are using. It also ensures dat your trade plan is clearly defined before entering your trade. Now, dis forecast tool itself is another powerful feature because it enables you to project where you believe price might move to in a specific period on time. You can customize dis tool to reflect your prediction by setting the anticipated price range and duration. As time progress, the TradingView will track whether your forecast is accurate, providing valuable feedback to your refined analysis. These tools are particularly useful for backtesting strategies or for practicing prediction in real life market or in real time. For example, if you are analyzing a breakout, you can use the forecast tools to mark where you expect price to move after the breakout. This allows you to evaluate how well your strategy will perform under different market circumstances. In addition to planning trade, the forecast tool also help you to calculate your position size, or by it can help you to with your position management. By visualizing or mapping out your trade parameters, you can stay disciplined and avoid emotional decisions during volatile market movement. So these forecast tools are really essential because they have a lot of importance in a trader's life. By incorporating your forecast tools with your trading routine, you will gain a better control over your trades, and you improve your ability to anticipate market movement. These tools are not only enhanced in your trading analysis but also help you to develop a structured approach to trading that aligns with your overall strategy. Now, the next tool we are going to talk about is the geometric shape. Now, the geometric shape in TradingView are versatile. They are versatile tools that help you to highlight specific areas of interest on your chart. It can help you to highlight specific interest on your chart. These shapes are like rectangles, circles, and triangles. They can be used to mark consolidation areas. They can be used to mark consolidation areas like this on the chart. These tools can be able to help you mark consolidation areas and you spot where a breakout is going to happen from. They provide a visual representation that simplifies complex price movements and make it easier for you to identify trading strategies or trading opportunities. For instance, rectangle are commonly used to highlight area of price instability, as you can see from my screen, where price is moving in a sideways area from up to down. They also indicate parallel support and resistance levels in a sideways moving market. This indicates a period of indecisiveness before price breaks out in either direction by marking out the zones in your rectangle, either to the downside or to the upside. They help you to anticipate reversal depending on the trend. While the circles and ellipse are another useful geometric tools, they emphasizes on specific points on the chart, such as areas where price repeatedly react from. If you can draw an area where price has repeatedly reacted from, you can you can get you can highlight that area by using your circle to make you understand that these areas are areas in price, are areas in the chart where market has reacted from. The geometrical shapes are not just only to make analysis more organized, but are to help you communicate ideas clearly if you share your chart with others. You can also use this tool to highlight areas such as double tops, double bottom, that can be very easy to explain whenever you come to your chart and you look at your chart. By marking out your areas on your chart, you can easily recall what you wanted to understand from your chart anytime you come to your chart. The next tool we are going to talk about in your trading view is our annotation tools. Our annotation tools in trading view are essential for enhancing your chart analysis and keeping track of key observations on the chart. The anchor text take it to a step further by attaching notes to specific points on the chart. You can you can attach notes to areas where you expect price to affect, or you can put a particular comment where you expect price, something important to happen in price. As we can see, this is an example. If you mark out an area in your chart, you can write whatever you are looking for in chart. Like at this area in chart, I can write out on this higher time frame. If I want to go to the lower time frame, I can write that this area is a retracement area. You can write your 4 hour retracement area, so that when you get to your lower time frame, you can easily spot that area you are looking for. This area we have marked out in time. If you go to your other time frame, your lower time frame, it can help you to get those area. You can also use your call out. Your call out is also another tool to write out important details you are looking for, to get back to the chart and to notify yourself later whatever you are looking for. You can write this down on the text. They are powerful tools and they are called the call out features. You can also customize these features by changing the color however you please. You can change the color and you can make it more visible, or you can make it a little bit transparent, however you want it to be. You just need to set make the setting accustomed to whatever way you like. You customize the color, you customize your writing, and you can also customize the size of your writing, the position of the call out, or anyhow you want to customize it to be. Customize the position, you can point it to any direction, or you can put it in any area of the chart you want it to be. A quick reminder or a less intrusive note. You can use this note to This note tool only appears when you hover over them. They keep your chart clean while still providing valuable context when needed. The note tool is also an important tool you can add to your chart. This is the note tool. You can add it to your chart and it will become invisible. Whenever you need it, it can appear when you hover around that area. So these are the tools that you can use as an annotation tool. The beauty of this annotation tool is that it can save directly onto your chart in TradingView. Every note, label or marker stays exactly where you place them on the chart. Even when you reopen your chart later, this ensures that all your observation remains intact and accessible for future references. By using annotation tools effectively, you can turn your chart into your personal trading journal. Whether you are tracking price action in real time or you are reviewing past trades, this tool provides a clear record of those thought process when analyzing your chart. Incorporating them into your workflow will not only improve your analysis but also help you to stay consistent in your trading approach. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you will never miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.